Hello, everyone. Happy holidays. Hope everyone's doing great. Hope everyone had an amazing holiday. Got to spend a lot of time with their families and friends. Got a great video for you today. This could be the tax play of the century for Tesla shareholders and many, many other shareholders. I'm going to go through some data today. The topic is super important. I've kind of been on this trend over the last several months due to the volatility in the marketplace, the fact that equity markets, stocks have been down most 25+% for the last 6 months. And the fact that we're getting very close to 12/31, which is the deadline to do a Roth conversion. So on today's live video, the tax play of the century for Tesla, IRA, and various other tech shareholders. I'm Adam Bergman, tax attorney and founder of IRA Financial. And I'm generally an optimist. Okay, so I like to look for the silver lining in any negative situation. That's just kind of who I am. So the good news is every difficult situation eventually passes. And for Tesla shareholders, this has been a very tough year. Okay, Tesla is down approximately 65% year to date. It had a really good day today so far. I'm a big Tesla supporter. I don't have a Tesla yet. A lot of my friends do, but I've been a shareholder for a while. Whatever you feel about Elon Musk, guy's a genius. And I came across this, tidbit of information that I wanted to share. Tesla's down, as I mentioned, about 65%, and it's still worth as much as Toyota, Volkswagen, Ford, and GM combined, about $350 billion. Okay, so even though it's having a tough year, less than 1% of folks have electric vehicles. So there's a lot of opportunity, and as we see with tax credits and the way government is encouraging people to buy electric vehicles, the trend will continue. So for long-term Tesla shareholders, why is this the tax play of the century? Well, you're going to get a chance, if you have this in an IRA or 401k, to lock in this depressed share value as of today, which it's been tough to watch, right? It's at about 120.97 today. It's up about 8%, close to about 7.3%, up about $8. It's been a tough last 4 or 5 months. It had a great run for the last 2 or 3 years, but it's been very tough so far. But what's the play? The play is you get to lock in the value of Tesla at 120 versus 400, where it was year to date. Okay, so you have the opportunity to pay tax, and I know that's an ugly word, tax, but to pay tax at a value, a significantly depressed value of down 69%. Okay, it's down $279 year to date. From which is crazy, right? The 52-week high was $402.67, and the 52-week low is $108. Okay, so we're definitely off the low, but definitely not anywhere near where the stock should be trading. And you have the chance to pay tax today at $120. Lock that in. Yes, it's ordinary income tax, but so long as you're over 59.5 and that Roth's been open 5 years, it's all tax-free when you pull it out. So hopefully you're patient, you have faith in Tesla, and over the next 1, 2, 5, 10 years, where Tesla should be trading at a much higher share value, you'll be able to then sell those shares and use those funds tax-free. So let me just kind of set the agenda real quick. It's going to be a short video because the blueprint's simple. You want to do Roth conversions where the share price is super low, or whatever asset, whether it's Bitcoin, Ethereum, Tesla. Let me give you some other share prices here. Okay, New York Stock Exchange down 12% year to date. S&P 500 20%, Nasdaq 8%, Russell 2000 23%, Meta down 65%, Alphabet 40%, Microsoft down 29%, Apple down 29%, Amazon down 51% year to date, eBay down 39%, Target down 35%, Walmart only down 1%. Home Depot down 21%, Nike down 29%, Coinbase down 87%, Shell is up 28%, British Petroleum up 26%, Chevron up 48%, Moderna down 23%, GameStop down 52%, AMC down 85%, KKR down 37%, Bank of America down 29%, Chase down 29%, Morgan Stanley down 15%, Goldman Sachs down 13%, MGM down 22%, Hyatt down 6%, Marriott down 10%, American Airlines down 33%, JetBlue down 57%, US Steel up 4.5%, and Kinder Morgan up 10%, which is the trend. Obviously, infrastructure and commodities, oil up, everything else down. Okay, so you can use Tesla, you can use Meta, you can use Slack, you can use any stock you really like. It's probably down 15% plus. Okay, so what does that mean? That means if you have the ability to pay the tax, you need to work with your brokerage firm, your IRA custodian, let them know you want to do a Roth conversion. They will issue a 1099-R, the value of the shares today. You'll pay tax on April 15th on that share price. So you obviously need to know you have the ability to pay the tax. But once you do that, that Roth is now live. You've started that 5-year clock. So long as you're over 59 and a half, the Roth's been open at least 5 years, it's all tax-free. This is the best tax play, the best legal tax shelter out there is the Roth IRA. Take it from me. I'm a tax lawyer. I have a master's in taxation. I've written 8 books on self-directed retirement accounts. The Roth conversion is the best legal tax shelter out there. Why? Because you can play with valuations based off market availability. Market determines value. Here, the market's been tough, right? This has been a very tough year for equities. But so long as you don't need the money, you're not retiring, you don't need to pay for a child's wedding or any big ticket item, it's just paper losses, right? So yeah, no one wants to look at their statements and see their portfolio down 10, 15, 20%. It's tough, it's rough, it sucks. But put on tax lawyer hat and say, hey, there's an opportunity here. Opportunity is to pay tax at a low value, lock that gain in, bang. So long as you're 59 and a half, the Roth's been open at least 5 years. It is all tax-free. Okay, from a tax lawyer, this is music to my ears. This is the ultimate tax shelter. Okay, so what are some things to think about doing a Roth conversion? Number one, obviously, you got to be able to pay the tax, right? If you do the Roth conversion today, 12/29, 12/30, taxes due April 15th. If you do it January 1st, taxes due April 15th, 2024. So I'm saying a lot of people like doing conversions end of year, but you can certainly do it January. That will give you a longer pathway to pay the tax. Yes, the clock starts ticking a little bit later, but hey, we're kind of towards the end of the year. The only reason why 22 could be a very viable year for a lot of us is losses, right? You may have other losses, business losses, NOLs. If you're a professional real estate developer, we know, President Trump, a lot of real estate developers, just like President Trump, have lots of losses. Not that, President Trump may or may not cheat on his taxes. I don't know. I'm not the IRS. I'm not his accountant. But I can tell you, I've worked with a lot of real estate developers. I have a lot of real estate developers as friends and family. They don't pay a lot of tax. Why? The tax code is rigged in their favor. Depreciation, accelerated depreciation, ability to deduct mortgage interest. Lots of developers get lots of deductions and don't pay tax, and then they're obviously able to turn ordinary income into long-term capital gains when they sell the asset. So it's not just President Trump. Lots of real estate developers don't pay tax. What does that have to do with Roth conversions? Well, if you have losses, you can reduce any tax you owe. You may have losses from lots of sources because 22 asset valuations have decreased, whether it's private equity. You saw with KKR, private equity fund, hedge funds are down 10 to 50%. Most equities are down. Private business valuations are down. So the fruits of being part of a depressed asset valuation cycle is that you can use those losses to offset income. So this could be a really opportune time to do conversions. Now, if 23 rebounds, we have accelerated gains, accelerated valuations, then you may not have any of those NOLs to offset gains. So that's why 22 December is rolling around. This could be a very opportune time to do a conversion. But if you do the conversion in January, you'll have an extra period of months to pay the tax in April 24. But obviously, it's very hard to time what's the low point of an asset, right? Is it today? Is Tesla going to go down further? No one knows, right? So you got to kind of feel comfortable with valuation. You got to be able to pay the tax. The next thing I would consider is your age. And I've talked about this multiple times. The younger you are, the more advantageous a Roth conversion is. Why? Because you have the chance to take more advantage of the power of tax-free growth. Someone who's 21 versus someone who's 71 is a lot more years to see that IRA grow tax-free before death. The third thing I always like to say is, what's your true faith in your asset? Are you an ultimate believer in Tesla? Are you 50-50? I don't know. This guy's a little off. He's spending too much time tweeting on Twitter, not enough time focusing on Tesla. He's got SpaceX. He's got other artificial intelligence companies. Maybe he's not really committed to Tesla anymore. It all depends, right? So you need to obviously be very comfortable in what you're converting. I spoke to a number of people this year that said, hey, Adam, yeah, I kind of did Roth conversions in 21 with Bitcoin and Ethereum, and I'm down 65%. Can I reverse the conversion? The answer is no. Once you convert, you're locked in. Prior to 2022, you were able to unwind conversions in that taxable year. That's no longer the case. Once you elect the conversion, you're pretty much stuck and locked into it. So you obviously need to be a long-term thinker, and you need to obviously be very, very confident in what you're doing. There's obviously risk too, right? I mentioned the Bitcoin, Ethereum risk. The risk is that you convert at X. Let's say you convert at a Tesla share price of 120, and it goes down to 80. You just paid Uncle Sam tax at a higher value. Now, the hope is that that share price will increase in the future, but there's no guarantee, right? So that's another item to consider. And the last thing is, what's your tax bracket going to be when you retire? When you have to take a requirement minimum distribution at 72, or we see now in Secure Act 2.0 at 75 in 2033, what is your tax bracket going to be? If you feel like you're going to be at a very, very high tax bracket, then conversions have more weight, more value, because you would be paying tax at a higher value, a higher tax rate if you took a RMD, required minimum distribution, of a pre-tax IRA. If you are expecting very low income, why? Because maybe you're just going to be on a fixed income, you don't need a lot to live, then maybe a Roth conversion doesn't have as much value, because you can just pull money out of your pre-tax IRA at any point and just pay tax on whatever you pull out. And since your tax rate is going to be, relatively modest, it's not the end of the world. Let's put it all together. All in all, as I mentioned, this could be the tax play of the century. We may not see share prices as depressed as this for many, many years to come. The last big market crash, arguably 2008. And what happened in 2009 immediately is the market went up 30+%. So it's conceivable that 23, the market could shoot up again, maybe not January, February, but potentially mid-2023, depending on what interest rates do. So again, this could be the last opportunity to lock in a low value on a Tesla share, or a share of Alphabet or Meta or whatever other stocks you really love, Amazon. Lock it in, pay tax at the low value, put those shares, move it from a pre-tax to a Roth, wait till you're 59.5, the Roth's been open at least 5 years, bang, it's all tax-free, and you just made a considerable tax bet for the positive by locking in tax rate at a low value. I've said this on multiple videos. I have many clients that did this in 08, whether it was real estate or equities, and I'm telling you, they're still talking about it 14 years later, saying, Adam, I was able to lock the share price in, lock this real estate value in, literally at 50% lower the value. I knew it was going to come back, right? Amazon, Tesla, these shares are going to come back. It's going to hit 400 again, maybe not 23, maybe not 25, but eventually it will. S&P 500 averages almost 10% a year over the last 100 years, year-end return. So it's coming back. So let me be smart. Let me be a long-term investor. Let me not be so blinded by the moment and look long-term. And if you look long term and you have confidence in Tesla or whatever share asset you're looking to convert, if you feel like you are going to have a higher tax bracket in the future, you can pay the tax. And again, you don't have to do it all in one time, but the more you can do today, assuming valuations are low, you can afford to pay the tax. This is an amazing, amazing opportunity. I've done everything already in Roth. I wish I had some left to do because I would have jumped on 22. The last 5 months has been ripe opportunity to convert. Now, I've talked to lots of you, lots of clients over the last several months. A lot of you said, hey, this is the chance to do it. IRA Financial, we don't charge for conversions. A lot of other custodians do in the self-directed world. We don't. What do you need if you want to convert? Well, if you want to convert Tesla shares, it's super easy because it's readily tradable. So talk to your brokerage firm and they'll handle that for you, and they'll issue a 1099-R. You'll give it to your accountant and you'll add that to your 1040. Now, it's added as ordinary income, not capital gains. So let's say you have $100,000 worth of Tesla shares, and let's say they're worth $40,000 today. You pay tax on the $40,000. Ordinary income, that $40,000 gets added to all the other income, whether it's W-2, 1099, on your 1040, and you pay tax in the aggregate. If you have NOLs, other losses that you can take advantage of, all the better. If you don't, you got to make sure you can pay the tax. What about in-kind assets that are non-marketable, like real estate, private equity, hedge funds, private businesses? That you would need a third party to provide a value. In those cases, you definitely have some more wiggle room, right? Who's to say your interest in the startup tech firm that you paid $100,000 for a 30% interest is worth $60,000 or 70 or 80? The third party will be able to provide you that value. And if the shares are a minority interest, not marketable, whether it's raw land, private business interest, minority interest in a hedge fund, private equity, potentially also get a discounted valuation. Now, I know you don't have a lot of time, but if you can't do it for 22, assuming valuations stay low in early 23, you can lock it in early 23 and you don't have to pay that tax till 24. So I know I actually have some clients that say, hey, Adam, it's better to do the valuation discount. It's better to do the conversion in January than December. Now, no one knows what their loss NOL situation will be in the following year. But let's say you feel like you can kind of map it out, like 22 is not going to be as significant as 23 would be from a loss situation. You can kind of manage your NOLs depending on your business predicament. Yeah, doing it in January versus December could be more tax advantageous because you have more time to pay the tax. If you do it in December of 22, you got to pay the tax by April 23. Yes, you can file an extension, but the tax is technically due by April 23 unless you're going to pay interest on that, which you don't want to because interest rates are higher. So it's super important to remember that. But if you feel like you could have more losses in 23, just not sure how the economy is going to play out, real estate may be down, you may be able to sock away more losses, then doing a conversion in January or February can give you longer runway to pay those taxes by April 2024. So all in all, it's been a really difficult year from an investment standpoint. Again, other than commodities, infrastructure shares, everything's down. From cryptos to equities, even target companies that are pretty conservative are getting clobbered this year. But silver lining on weak share prices is that conversion. Being in a Roth is so opportune and so tax advantageous. Trust me, from a tax lawyer, it is the best thing out there. Why? Because once you're in a Roth, so long as you're over 59.5, the Roth's been open at least 5 years, it is all tax-free, meaning you can just literally put your hand in your Roth IRA and just take whatever you want and use it and not pay any tax. Not enough people understand the power of the Roth. I wrote a book called In God We Trust and Roth We Prosper. It's true. And it's true. Obviously, remember, you got to be able to pay the tax. You have to have faith in what you're doing. There is risk. The Bitcoin Ethereum model, you imagine you did a conversion of Bitcoin or Ethereum in December 21. Now it's down 70%. Not super pleasant, but So long as you're not taking that money out, it's just paper losses. So hopefully it will go up in the near future. And then when you need to pull that money out after you're 59 and a half and the Roth's been open at least 5 years, it will all be tax-free. Remember, think about what your tax bracket will be when you're in your 70s. The lower it is, the less advantageous a Roth is. The higher the tax bracket is, the more advantage a Roth conversion will be. And ultimately, you got to be able to trust the process. You have to know yourself. If you're not a patient person and you feel like you're going to dip into the Roth before 59 and a half and the Roth's open 5 years, don't do it. Don't do it. Don't do it, because you're going to lose the ultimate value of the Roth. But if you feel like you can resist the temptation, leave that Roth, preserve it, then being able to generate tax-free growth, pay the tax at a low value, maximize your tax wealth by pulling that money out tax-free at a high value. Doesn't get better than this, right? Think about it. You pay tax at a low value, you pull it out tax-free at a high value. This is the name of the game. This is what gets tax lawyers excited, right? We're dorky, we're nerdy. This is what we like. Other people get excited with other stuff. Roth conversions at discounted valuations get me super pumped. Okay, yeah, I'm a loser, but that's who I am. This stuff makes me excited. So hopefully you've watched this video and you can take a little bit of my, $150,000 law school education and my 20 plus years of practicing tax law. Use that, put in your pocket. If you have the opportunity, you still have time in December. If you missed this, you're watching this video in 23, the market's still down. The asset, whether it's Bitcoin, whether it's real estate, whether it's Tesla, GameStop, AMC, whatever the share price is, if you have faith in it, it's depressed, you think it's going to go up, you have the ability to pay the tax, whether you have some losses or you just have some extra cash and you're a patient person and you can wait till you're 59 and a half, the Roth's been open at least 5 years, bang, something you should really, 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 really consider. Talk to a tax professional. Obviously, I'm not giving people legal tax advice here. This is something that I'm trying to educate people on what the Roth IRA rules are, how the Roth conversion rules work. Pre-2010, you weren't able to do this. The IRS opened up this door. They haven't closed it yet. They could. The Build Back Better bill tried to close this loophole by having income limitation for Roth conversions. They never passed. That can come back, whether it's in 2 years, 4 years, 10 years, or 30 years. So there is no guarantee that this Roth conversion, where there is no income limitation, will exist forever. Probably won't. So whether you want to take advantage in 22, 23, 24, 25, consider it, understand the rules. But anyways, and obviously it makes perfect sense, right? You convert at a low value, you hope that asset goes up in value, and then you pull that money out tax-free, so long as you're over 59 and a half and the Roth's open at least 5 years. My 9-year-old son understands that, right? Pay tax at low value, pull the money out tax-free at a high value down the road. It's a no-brainer, win-win. Everyone wins except the government. So I think we all can get on that, right? I'm not going to be political, but that's something that I think everyone will be in favor of because listen, this is a private retirement system. We got to worry about ourselves. Social Security is out there. Who knows if it will be solvent after 2035? Probably will be, because without Social Security, whoever ends up killing Social Security will never get elected again. So Social Security will be around, but it's up to us if we want to have a fruitful retirement, be able to provide for ourselves, our family, our kids, our grandchildren. It's up to us to do it. And a Roth conversion could accelerate that wealth by saving you the tax on the IRA distributions, being able to maximize your retirement wealth, pull the money out without tax, not have to worry about what tax rates will be in 5, 10, 15, or 20 years. It's just an amazing opportunity. So I think I kind of pounded this point in the ground more than I needed to. But again, that's kind of how I write as a tax lawyer. I want to make my point. I want to make my point again and again and again, because this is such a unbelievable opportunity and may not exist forever. We've had the blessing of Roth conversions without income limitations for 12 going on 13 years. I don't know when it will stop, but I don't know again when we're going to see equity prices like this, right? When are we going to see Tesla down 70%, Walmart, Target down 35%, Amazon down 50%, Apple down almost 30%. When are we going to see that again? I don't know. I hope never, right? Let's hope equities keep going up, but it will happen. Maybe it's in 5 years, 10 years, 20 years. But this could be, and this probably is the best opportunity since 2008, so 14 years ago, to take advantage of a falling equity and asset marketplace. And the last thing I'm going to say is, you don't want to be that person that regrets this, especially if you have the ability to pay the tax. Don't be lazy. Whether you're sitting on a beach, you're on the ski slopes, all it is an email, phone call to your broker, your IRA custodian. It's not difficult. It's easy to do. Pay the tax in April, or you can wait till January, February, pay the tax in April 2024. Lock it in. So long as you're patient and you can wait till you're 59 and a half, the Roth open at least 5 years, you can really take advantage of the tax play of the century. So without adding anything more and pounding the same point on the ground 100th time, happy New Year, happy, healthy New Year. I want to wish everyone only happiness, health, prosperity for 2023. I hope the equity markets, the crypto markets, the real estate markets prosper, and we don't have to worry about Roth conversions, discounts for a long, long time. But this is it. So take advantage of it. This could be the next great opportunity, and it may not come around for many, many years to come. So remember, I told you so, but I'd rather be sharing a nice bottle of Pinot Noir with all of you in the next 10, 15, 20 years, where we can talk about the amazing opportunity and tax play we did in 22 or early 23, where we were able to pay tax at these depressed prices, lock in tax-free growth, and you guys have been able to pull that money out tax-free in the next 5, 10, 15, 20 years. All I want's, nice bottle of Pinot. That's it. You can send me that when you're pulling out your money tax-free in a Roth IRA. Otherwise, happy, healthy New Year, and all the best. Please feel free to give me a thumbs up and subscribe. Otherwise, have an amazing New Year's. Take care.